The ICT Judas swing strategy is definitely one of the best ICT strategies out there. However, it is being taught wrong all over YouTube. It's not being taught how ICT has taught it. So in today's video, I'm going to be giving you guys a full step-by-step breakdown on how to trade the ICT Judas swing. Not the wrong way you guys have learned it and you guys are wondering why it's not working for you guys in the live market. Is because you guys have been taught it wrong. However, in today's video, I'm going to be showing you guys the authentic, proper way to trade it. And I'm also going to be ending off the video on TradingView, showing you guys how you can execute the strategy into the live market. So let's get into it. Alright guys, so if you are new to this strategy and you're unfamiliar with what is the Judas swing strategy, I'm going to tell you guys. So basically the Judas swing is the false one on liquidity on breakout traders. Now, what do I mean by this? Now, as you see here, we do have a consolidating market. You guys do know that in the Asian session, market does like to consolidate. So once London session starts, market likes to take out the Asian lows or either the Asian highs, sweep liquidity, trigger breakout traders, and then quickly reverse. Now, guys, what are breakout traders? Breakout traders like to trade off when structure is broken. So what do I mean by this? Levels of structure like support and resistance, which are like equal highs and equal lows, if you guys do not understand. So say we have a resistance here, equal highs for example. Market comes and breaks structure above the resistance here. These breakout traders will be looking to buy to try catch the long, as they believe once market breaks out of the structure, it will continue and they'll try catch the continuation. However, what the Judas swing does, it fakes the breakout. It fakes market breaking out, so the breakout traders can start to place their sells here. In our example right here, breakout traders will be placing sells as they believe market is going short. However, market will quickly reverse using them as liquidity. This is why we do get this very energetic move here, as market does take out liquidity in the form of stop losses from retail traders trading support here, for example, placing their stop loss here. Their stop losses hit before quickly reversing, as well as breakout traders. Now, while breakout traders are placing their sells here and have their stop losses up here, they come here, market comes and takes them out using them as liquidity. As for times and pairs, guys, 12 a.m. to 5 a.m. New York time and 4 a.m. to 9 a.m. UK time. Now, guys, this is within the London kill zone. The London kill zone is 2 a.m. to 5 a.m. New York time. So that is within our Judas swing time. However, I do see a lot of people on YouTube teaching it wrong, saying either 7:30, 8:30 a.m., which is totally wrong, guys. ICT teaches 12 a.m. midnight time to 5 a.m. So that's what we are going to use. As for pairs, ICT teaches EURJPY, GBPUSD, SPX 500 and NAS 100. Now, ICT mainly trades the Judas swing on the SPX 500 and NAS 100 on the indice pairs. However, guys, I have added GBPUSD and EURUSD as they work very well for my back testing on this strategy. So now, before I continue with the video, I just want to take 30 seconds of your time to show you guys a potential opportunity where you could potentially make thousands of dollars. So you guys have been asking me to open up a signals room and share my trades with you guys, and I have. Now, in less than 2 weeks, we are 8% up. As you guys can see, I fully send out the signals, the price to buy at, the stop loss, and the take profits. Now, I even give you guys updates on when to put your stop loss to break even. And as you can see, the trades do hit full TP. Now, 8% up in 2 weeks. That is absolutely amazing, guys. Now, 8% on a 200k account, which, by the way, we 100% guarantee to get you funded on and pass your evaluation or all your money back. That is $16,000, guys. 8% on a 200k account. Imagine making that type of money in less than 2 weeks, guys. Now, guys, the Telegram is the first link in the description, guys. Make sure you join. I can get you funded guaranteed, and I can also provide amazing signals for you guys. So if you have any inquiries, make sure to message me on Telegram at Ems Capitals. Alright, guys, I will be going into a step-by-step breakdown now, and I will not be wasting any time. So I've given you guys a quick brief overview. Step 1, mark out our liquidity. Step 2, wait for our first run. And step 3, entry. Now, this is very brief. I've also included a bonus step in this video, so make sure you guys watch to the end, as this bonus step will really help you guys with this strategy. Alright, guys, on to our step 1, liquidity. Now, the only type of liquidity we are going to use in this strategy is our Asian highs and Asian lows. Now, guys, later in the video on TradingView, I will be showing you guys the indicator to use to look for your Asian session. And within that time, you just want to see the high of the Asian session and the low of the Asian session. You want to mark it out with a line or whatever's easier for you, and you want to wait for market to either take out the Asian highs or the Asian lows. This brings us on to our step 2, the false run. Now, guys, market will sweep liquidity. It might take out the Asian highs or it might take out the Asian lows, guys. If it does not, do not place the trade. Do not trade the strategy if we do not get a liquidity sweep. And just to keep in mind, guys, if we take out the Asian highs, we are looking for sells. If we take out the Asian lows, we are looking for buys. Make sure you guys stick to that, okay? And once we have gotten our false one, we really want to look for a reversal pattern such as a market structure shift. This will indicate to us that market is no longer going to push further upwards. We don't want to place a sell here and market ends up pushing to about here. Let me just draw that out for you guys. If we're going to sell here and market just keeps pushing, we will be taken out. We will be in too much drawdown, guys. We want to wait for a market structure shift. We want to wait for a change in trend to signify to us that market now is indeed reversing. And if you guys are unsure of what a market structure shift is, it is basically a reversal pattern that indicates a change in trend. So in our case, if we are getting higher highs, lower high, and then we do end up getting a lower low, and then we get a lower high, this is our change in trend. As you can see, we were bullish. However, we're starting to get a change in momentum. As you can see, we are starting to move over to bearishness. That is our market structure shift, and that's what we want to look out for in order to confirm our bias. Alright guys, on to our third and final step, which is our entry. Now, guys, I've explained to you guys what a market structure shift is. Now, for displacement. Displacement is basically market moving with a lot of volume, moving quickly. So, in our case, you can see we had a market structure shift with displacement. Now guys, your market structure shift is only valid if the significant high has a body closure above it. So in our case, you can see the body of the candle has closed above the significant high, making it a valid market structure shift. Now guys, the closure of the candle says a lot. If the candle were to close down here, however the wick were to go above this high, this just shows that market may want to go bearish. As the candle is closed here, the next candle could go here. So I hope you guys do see the reasoning behind that. Once we've got our market structure shift with displacement, we want to mark out our fair value gap. Now this is the best fair value gap I see right here. There is one down here, however I do not really like this fair value gap. So I've marked out this fair value gap and I'm going to enter at my 50% mark. Guys, this is a little strategy I use to minimize my drawdown, and it works fantastically, guys. I recommend you try it for all your fair value gaps. Mark out your fair value gap, use a Fibonacci tool, find the 0.5 mark and enter off the 0.5 mark. Now guys, as for time frames, for your lower time frame confirmations, guys, it's valid to use the 1 minute, 2 minute and 3 minute. You could even hop on the 5 minute, however I do not recommend it. However, if you guys stick to these time frames, you will be successful with this strategy. So on to the bonus step, guys. Now I do recommend you guys do try it out. This entry model is absolutely amazing. If you are a fan of the channel, you have probably seen it before. So this is the engulfing candle entry. Now guys, simply to put it in short, you just want to wait for the first engulfing candle and enter off that. So after we've gotten our liquidity sweep, either we've taken out the Asian highs or lows and market is sweeping liquidity, we want to wait and see when market forms the first engulfing candle. And guys, you want to wait for the candle to close for you to enter. Guys, you have to wait for the second candle to close in order so you can confirm it is in fact an engulfing candle. Once we've gotten the closure, we just want to enter straight away, stop loss below the swing low, and we target opposing liquidity. It is as simple as that. And this entry model is absolutely amazing. I recommend you guys backtest it and try use it for yourselves, and you guys will be surprised. So alright guys, now after giving you guys the full step-by-step breakdown of this strategy, I hope you guys are fully aware of the strategy and you know how to trade it. Now, I'm going to hop onto the real market, onto TradingView, to show you guys some examples and show you guys how you can implement it into the real market. So, let's go. Alright guys, onto the first example on EURJPY. Now guys, this trade ran about 20 pips. Nice 1 to 4. However, if you did hold, you would have caught about 36 pips, which would have been about a 1 to 6, which is absolutely amazing. So, to start off guys, I am using two indicators. I'm using the Asian range. So if you search up Asian range, and it should be Asian range by Nico 948, select that, and you also want to search up sessions and choose sessions by Aurochs_AIF. Now for the sessions indicator, go to settings, uncheck London and Tokyo, and for New York session put midnight to 5 AM. That will delineate our time zone, delineate our kill zone. So as for Asian session, go into sessions, make sure it's 7 to midnight for this strategy. So, alright, to start off, I'm going to be removing all drawings off my chart and replaying the market to about the Asian session. And from here, simply, I'm going to mark out my Asian highs and lows, which is very simple. Asian high and Asian lows. So now I'm going to see which direction market takes liquidity. And if we take the Asian lows, we are looking for buys. If we take the Asian highs, we are looking for sells. So play out market. There we go. You can see market does take out the Asian highs. And now our next step is to wait for our market structure shift. So I do want to see this low broken right here for our market structure shift. So I'm going to play out market and wait for our market structure shift. And lo and behold, if I do go into the 2 minutes, a little bit clearer, you guys can see we do get our market structure shift. We get the body close below the low. So from here, where is our fair value gap, guys? We do get a fair value gap left right behind here. And this market structure shift is with displacement. As you guys can see, we are getting big candles with a lot of volume. So now I'm simply going to mark out the 50% area of our fair value gap. And I'm going to set our limit order at the 50% mark now. Okay, stop loss above our swing high. It's about 4.2 pips. I'm going to make that a little bit more, as my personal preference is to give my trades a little bit of room to play out in. I do not like making my stop loss too tight, as market will just come and hit your stop loss before reversing and you will miss out on the trade. So as for take profit, target opposing liquidity, guys, like equal lows or equal highs in our example. So I'm going to be targeting this low for about 20 pips. Now from here, guys, this is the easiest step. Simply just wait for market to hit your zone. As you guys can see, we'll get market tap us in right there. As you can see, we are in some drawdown. If I do measure it, we're in about 2 pips drawdown. However, that is very minor. So if I do end up playing the trade, you guys can see in about from 2:30 to about 3, so in about 1 hour we do hit full take profit. If you were to risk 1%, you would make 3.5% on your account, which is absolutely incredible. So it's as simple as that, guys. Just to recap, we took our Asian highs, we had a market structure shift indicating a reversal pattern, we found our fair value gap, we marked out the 0.5% of the fair value gap, we entered off the 0.5%, stop loss above swing high, targeting opposing liquidity, and we simply let the trade play out. It's as easy as that, guys. I don't know why people overcomplicate this strategy. It's absolutely amazing. However, it is very simple at the same time. So on to the next example. Alright, guys, now on USD, I did catch an amazing 1 to 5 with about 30 pips, which is absolutely amazing, guys. If you were to risk 1% on this trade, you'd make 5% on your account, which is absolutely amazing. So I'm going to start off by removing all drawings once again. And now simply replaying the market. Okay, guys, so simply we've got our Asian highs and our Asian lows. Now, if I play out market, market does sort of close above the Asian highs. However, if you do go into a higher time frame, you can see this is just a wick. It is not a strong closure, so I am not going to take that as a closure. So if I do end up playing the market, you can see this is a valid closure. As you can see, we do get bodies closing below the low. Now, as we've taken out the Asian lows, we are looking for buys now, and I am going to replay the market a little bit. So just to make it visible. Okay, so we've taken liquidity to the downside, guys. As you can see, we've taken out the Asian lows. And now I'm going to be using the engulfing candle entry. So guys, I'm going to be waiting for the first engulfing candle after we have swept liquidity. So if I play out market, if I actually slow it down a bit, it'll make it a lot easier. You guys can see, boom, this is our first engulfing candle. Let me play that again for you guys. See, we're playing out market. Boom, I can see we do get engulfing candle. However, guys, the trick is you want to wait for market to close first. You want to, not market, you want to wait for the candle to close first, and that is when you place your order. Now, once the candle is closed, I'm going to place my order. Stop loss at about 5 pips, which is below the swing low. And as for take profit, I'm going to target equal highs. So I'm going to target this high right here. As you guys can see, I'm going to take partials along the way, and that is up to your own personal preference. if you want to take a partial at this high, or if you want to take a partial at this high, or you could even take a partial at this high and have your final take profit up here. Is all up to your own risk management preference and your own strategy. So if I play out market, you guys can see, let me just speed this up for you guys. You guys can see we do hit full take profit in about 4 to about 5. So in 1 hour 30, we could have made 5% on our account, which is absolutely amazing. This strategy works like magic. It is definitely one of the best ICT strategies, and it is so simple, guys. So on to the next strategy. Alright guys, on to the third and final example on NAS 100. Now guys, this example is a little bit different from what I've taught you guys. However, I just want to go to show that you can change a few of the rules, and if you have a couple of different confluences, you can definitely use that as long as the ideology of the method is correct. So guys, this trade was absolutely amazing. We ran 1 to 6, as you guys can see. Now I'm going to explain to you how I managed to catch this trade. Firstly, this one's going to be a bit more brief than the rest, as you guys are up to date with the strategies. Firstly, on the 10-minute, if I do reset my chart with our Asian session, we did take out the lows at first. However, we did end up taking the highs. I did not see any valid market structure shift on the lower time frame, so I did not enter. However, later on, I did see a very nice tap into this order block right here. As you guys can see, market taps into the order block fantastically. It's beautiful. If I reset my chart and go into the 1 minute for our lower time frame confirmations, you guys can see I did find a lower time frame. You guys can see I did find a lower time frame order block right here. Now it's a beautiful engulfing candle right here. Market does tap into our order block fantastically, and I do put my stop loss above the swing high, and I do give a bit of room to play out on. So as for take profit, I do take partials on all my trades. First take profit could be here, for second take profit here at any of the lows. Guys, it's all up to personal preference and your own risk management strategy. So as for me, final take profit was about here, which ran me a nice 1 to 6. If you were to risk 1% in this trade, you'd make 6%, which is absolutely crazy. Now guys, if you did hold all the way, it would be a crazy 1 to 15 risk to reward trade. However, if I do up into a higher time frame, I do not see, actually yes, you could place your take profit right at this low and catch yourself a nice 1 to 15 with the Judas swing, which is absolutely insane. Now guys, I hope you enjoyed today's video. If you have any questions, just make sure to leave it below in the comments. Make sure you check out the free Telegram, you join the Signals Room and the Fastpass service. So thank you guys so much for watching, and I'll see you next time.